Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Charlie Pellett. Doug Krisner has the day off. Investors are looking ahead to the Federal Reserve decision happening later this week. Fed Chair Jay Powell is expected to push through another quarter-point interest rate cut this week. That despite growing unease among fellow policymakers that inflation remains too high. And in Asia, the Reserve Bank of Australia's rate decision and a raft of Chinese data are the key events in the week ahead. We heard from Mark Matthews, head of Asia research at Julius Baer, and he spoke with Bloomberg's Avril and Shery.
What are you expecting this week? I mean, 25 is baked in, but what else are you expecting to hear from the U.S. Central Bank?
Well, everybody wants to see how hawkish of a cut it is because we know there are a lot of dissenters. I can count basically 6 out of the 12 voting members of the FOMC who expressed some concern over inflation. And so we'll have to look at how many dissenters there were and how Chairman Powell handles the Q&A session to see how guarded they want to be about further rate cuts going forward. But for the record, we still expect another rate cut in January and then one more in March.
What is this going to mean for Asia currencies, including the yen? There's some expectation that the BOJ will have to hike and then keep hiking for us to see more sizable appreciation in the currency.
I think that's probably right because they have a significant balance sheet they can also offload to help tighten monetary policy. So we are looking for a rate hike in Japan this month. Then we're looking for one more in June next year. So that would take them up to a policy rate of 0.75%, which still leaves real rates deeply negative because their inflation is at 3%. So I would expect some appreciation in the yen, but I wouldn't expect it to skyrocket. And if you compare now to that last time there was a surprising change in the BOJ and a big reversal in the yen, there were a lot of short positions back then that needed to be covered. And now, in fact, people are on average slightly long the yen.
Yeah, that's a good point, right? Because what we saw in July of 2024 was that crazy unwind when it came to yen carry trades. And in fact, that even hit U.S. stock performance. Will there be any implications from what the Japanese policymakers do here in Japan for global markets, especially given how sensitive global bond yields have been to JGBs?
I don't think so, because I still think that Japanese investors will want to keep a healthy exposure to U.S. treasuries. And so I know they own over $1 trillion of them. But as I said, if the policy rate in Japan is only 75 basis points in June of next year, then I'm not expecting the Japanese government bond yields to skyrocket further. And where they are now, I would say, is actually reflective of a healthy economy. I know there's great consternation around how quickly they've gone up, but I think Japan is in a much better situation today with some decent inflation and some decent growth than in the decades past when they had very little of either.
Mark, we have plenty of central bank decisions to go around this week, including the RBA. Of course, we had the RBI cutting rates as well on a week where we have plenty of eco data, China trade data out today as well. Is there anything in particular that you're watching for more momentum or catalyst when it comes to Asian markets?
Yes, I am watching the RBA. It is our favorite bond market in Asia, and the reason for that is you get a much higher yield in Australian investment-grade corporate bonds than their U.S. peers. If memory serves me right, it's about 5.5%. And their inflation is high. I think it's over 3%. Their unemployment is very low. And their private sector is doing very well. There's a lot of confidence in the economy, so I don't think the RBA will cut, and I think that will provide stability to their currency. So we're looking for the Aussie to be about 5.5% higher 12 months from now versus U.S. dollar. And putting all that together, I think it's a very good environment to invest in corporate bonds.
The thing of the RBA is also that I think investors are watching to see how hawkish they are. There had been chatter not so long ago about a prospective hike. Is that something that you're putting in the calculus? How might that put risk to your existing view?
We're not expecting a hike in Australia, but we should watch the inflation rate because it has been rising for the last 4 to 5 months and also been above expectations for the last 4 to 5 months. So I guess if their economy really gets a big head of steam, that they would need to raise rates. But right now, it's not in our forecast.
One of the economies very closely tied to China's economy, of course, is Australia. When it comes to what you're seeing among tech, AI leadership, what is the, I guess, risk to the view, given how these things we've seen in the past 2 years, they shift very quickly. We've gone from OpenAI to Alphabet. What is that going to mean for Chinese tech investment?
Well, it's a different ecosystem, of course. So they do have artificial intelligence, they do have large language models, but in China, you're also talking about advanced manufacturing, robotics, and biotechnology. And so what I think is interesting is how quickly they're picking up market share around the world with their technology. And that has implications for their currency because the more they sell those things overseas, the more money will be repatriated to China into the renminbi. And so I think actually the renminbi will be trending up over the next few years as they increase their global market share in these products and services that they're very competitive in.
Mark Matthews, head of Asia research at Julius Baer, speaking to Bloomberg's Avril and Shery. Coming up, we will dive deeper into the latest data coming out of Japan and what this means for the Bank of Japan's rate decision. Welcome back to the Daybreak Asia podcast. I'm Charlie Pellet. Doug Krisner has the day off. We go to Japan next, where a slew of economic data was released. In Tokyo, labor cash earnings were released. Stronger wage gains in October bolstered the case for the Bank of Japan to deliver a 25 basis point rate cut at its December 18th and 19th meeting. And for more, we heard from Bloomberg's Brian Fowler. He spoke to Bloomberg's Avril and Shery.
First of all, we had the nominal gains, which have been very steady, and that's a positive sign for the BOJ. On the other hand, we saw real wages fall for a 10th straight month. But the problem there isn't the nominal wage gains. Those are steady. It's the inflation. So that's yet another reason why it makes sense for the BOJ to hike rates to try to put a cap on inflation. So I think overall the wage data definitely support the case for a hike on December 19th and possibly for further tightening well into 2026.
Is that to say that we should be discounting what we got out of the third quarter GDP numbers?
Well, Avril, I wouldn't discount it. Those numbers definitely were a little bit bleaker than we expected, and they will add justification to Prime Minister Takaichi for the very large stimulus package that she announced last month. On the other hand, we've got all kinds of conflicting data. A week from today, you can see this on the Bloomberg terminal, we have the Tonkan coming out, and we've already got surveys from economists showing that they broadly expect business sentiment to stay steady, possibly even getting a little bit better for large manufacturers. So the BOJ is going to be looking at all these figures, wages, the household spending we had last Friday, today's revised GDP, and of course, Tonkan next week. And I think broadly speaking, while there are pockets of weakness, the trend remains fairly solid and certainly solid enough for the BOJ to hike rates. Of course, the BOJ will say that policy, even with the hike, remains accommodative. That's important to show that it's on the same page as the government. But I think all things being said, there's no reason not to go ahead with a 25 basis point hike.
To your point on being on the same page, I mean, for the last couple of weeks, we continue to get these signals coming from the government that they're not going to get on the way of a hike.
Yeah, exactly. So they could have. Anytime they could have said things to indicate that they were not in favor of the BOJ hiking. And from the government side, we haven't seen that. And also from Governor Ueda's side, he's given fairly subtle hints. He said, I'm working closely with the government, and we know that he met with Takaichi. The implication is that he explained to her what needed to be done, and she did not object, and he's basically said that he thinks that he's got the green light to do whatever he thinks needs to be done, and we think that means a hike.
Bloomberg's Brian Fowler speaking to Bloomberg's Avril Hong and Shery.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.